Hello, folks. Welcome to the FundKernel podcast. I'm Simon, co founder of FundKernel, and you're listening to episode 5. And my guest this time is Mr. Arnold Ip, executive chairman of Altus Holding. Arnold is a veteran in the finance space, having held senior executive positions at numerous global financial institutions, including Standard Chartered and Unitas Securities. But what's more interesting is that Arnold is a pioneer in the space of Japanese real estate investment, as one of the first non Japanese trying to break into the residential real estate market. 20 years on, he now runs Altus and asset managers with numerous residential real estate holdings in Japan. So, in this conversation, Arnold and I looked back at how he got started in this space, the challenges that he faced, and what he thinks about the Japanese real estate market going forward. Japan has always been a visitor hotspot for many Asians. Well, now, maybe after this conversation, it may become a hotspot for many Asian investors as well. Here it is, Mr. Arnold Ip of Altus Capital. So, everybody, I'm joined with, I'm kind of excited about this episode here. I'm joined by Arnold from Altus Capital. Hey, Arnold.
Hi,
So
Simon. How are
Arnold,
you?
yeah. Look, our Arnold and I, we met maybe 6 months ago, maybe a little bit more, in the middle of last year. Arnold is a veteran in the in financial industry space, financial services space in Hong Kong. You've been around, you've done it all. So I'll get a chance for you to maybe introduce yourself and your history. What are some of the things that you've seen, and what have you been doing?
Okay, thank you, Simon. Actually, we met last summer. I think that was the first time we saw
Yeah,
each other. Yes, I have been in the industry since the late 80s, I'm afraid. That's a long time.
nothing to be
I
afraid about.
I initially started as an investment banker um, in the equity capital markets, mainly doing IPOs, fundraising, private and public, advisory stuff. And I actually went on my own. I set up Altus, which is a company I founded in the late 90s after about 10 years with an investment bank. And the first thing we did was actually not investment banking. It was actually private equity. We actually
Mm,
raised some funds to invest in private companies seeking development capital and took them public. So that was actually my first venture outside of um, a an employment. And after a few years,
the
I
market for private equity.
that was
Yeah,
actually at the very beginning of the private equity market development in Hong Kong. It was in the late 90s.
yeah.
It was actually it was just after the first Asian financial crisis. So we were actually able to
Okay.
pick up some companies at good valuation. When the market was bad, those companies weren't able to raise funds or go IPO. So we actually picked up some companies in Hong Kong, in Taiwan, in Korea, in Malaysia at good valuations, and we took them
Mm,
public one by one, or we sold them through trade sales. But it was tough. It was a tough business because every single investment was very unique.
mm.
Each business was unique, each management was unique, and it's not very scalable. And with some performance fees and earnings from the private equity business, I actually personally started to look at investing in something with recurring income. And that's where Japan came in, because I don't know if you remember, or you you're probably too young to remember.
Yeah, I think I'm still in school back then.
In those days, Japan was going down and down and down, all the way down. No prospects of coming back up. Actually, in the late 90s, a lot of the Japanese banks were pretty much technically bankrupt. And we went to Japan to look at some property investments
Mm.
for the recurring income. The investment sizes were small. And to my surprise, there's actually no restrictions on foreigners. Actually, one of the first questions I get asked these days is there any restrictions in Japan?
Oh, so back then there's less restriction.
There's absolutely no restrictions back then, not even now. There's never been any restrictions. Actually, Hong Kong market, until not so long ago, foreigners had to pay highest transaction costs.
Yeah.
In Japan, everybody's the same.
Oh, wow. I didn't know that.
We can
It's
own
okay.
anything. We can own pieces of land, freehold. You can't even own land in Singapore. But in Japan, everybody is the same. So that was actually quite attractive. And not only that, what was attractive at that time was the yield was really high. Because as I said, the banks were technically bankrupt. Everybody was selling. No one was really buying. So we bought some small buildings with the freehold land on which these buildings were built. And we just collected the rent. It wasn't all
Yeah.
smooth sailing.
Simple business model.
It's a simple business model because we thought, oh, it's a no-brainer because yield was high, 8 to 9% yield. And of course, the interest rates then was very low, around the rate, the level we are seeing today. So theoretically, it was a no-brainer. So we went in, we put in our money, we bought a building as an experiment, we collected rent. But we faced our first problem. We couldn't actually get any bank loan.
Okay.
Again, there's no restrictions on foreigners borrowing from banks, buying land or anything like that. But legally, there's no restriction. But as a foreigner, because they don't know you, you'd never be able to borrow from a bank. So it's catch-22, because if they never lend to you, they'll never get to know you. If they don't know you, they'll never lend to you. So that was our first problem. And we started looking around and we ended up borrowing from the US banks. And in the early 2001, 2002, in the early 2000s, the US banks were just beginning to lend in Japan using the CMBS market, the commercial mortgage-backed securities market. So the likes of Morgan Stanley and Credit Suisse, they were lending to investors, and we had to mortgage the investment properties. They would lend, and after they have accumulated a certain loan size, a portfolio of loans, they would then securitize them and sell them off tranche by tranche. So that was the CMBS market. It was just beginning in Japan in the early 2000s, and then it grew very quickly. So that actually enabled us to not only borrow, but it enabled us to actually set up our first Japanese investment property fund. That was in 2002. So using some funds raised from our investors in our private equity funds, we started to look at investment properties in Japan, initially in the major regional hubs. And gradually, we invested in all the regional hubs, including the capital like Tokyo. And we raised altogether 4 funds from 2002 to 2007. And as a fund manager, we were also planning ahead because all these funds had limited life. And we were actually, by then, we had already built up a pretty sizable portfolio, actually probably one of the largest held by a foreign fund manager. And we decided to merge most of those portfolios, where the merger took the form of investors in our funds would get shares in the merged entity in return for their shares. So it's like a share for share exchange. And in return, what they got was not just shares, it was shares in a REIT which we successfully got listed in Singapore in 2007. So we actually monetized the, as fund manager, we actually enabled our investors to have liquidity in their investments, because the REIT
Yeah.
listed, they can buy, they can sell, they can buy more, they can sell at any time they like because it was listed. And hence we were actually the first Japanese property REIT listed in Singapore. And in 2007, if you remember, it was the financial crisis. It came about
Yeah.
2 months after the REIT got listed. And I still remember that Christmas in 2007 was one of the most worrying Christmas I spent, because Morgan Stanley said, Arnold, we
Yeah,
are
I could imagine.
unable,
I could imagine everybody was stressing back then.
we are unable to refinance your CMBS loans. And we were sitting on a number of different CMBS loans, which were maturing in a few months, in a year and a half, in 2 years. So staged maturity. But we knew full well that when each of these loans matured, there was no way of refinancing them unless we borrow from a Japanese bank, and we didn't know any of them. So I was quite worried. But the only lucky thing, the only luck we had was we were lucky to have gotten the REIT listed, and we got in some cash. That cash was not enough. It was about 130 million US worth of new money. It wasn't enough to pay off all the debts
Right.
as the loans matured. So we had to find other ways. The money actually enabled us to delay the problem for a little while longer. And during that time,
Yeah.
I still remember from 2008 to 2010, or early 2011, I actually went around to many, many Japanese banks. So I had to make sure that they got to know us, so that they were comfortable to lend to us. And actually, altogether, I visited time and time again, repeatedly, over 70 Japanese banks, big ones and small ones, the regional
Wow.
and the big ones like Mizuho Bank and so on.
Yeah.
And it took a long time. To their credit, they were willing to spend the time to see us each time. Altogether, I must have visited Mizuho Bank to have coffee with them for at least 8 to 10 times over those years. And they listened to us, they listened to our story. And I think it was in 2010, all of a sudden one day, they rang up our Japanese colleague and said, hey, do you think you guys would like to borrow from us a small loan just to sell off our business relationship? And we were running out of options. We had already spent almost all our cash from IPO. We were beginning to sell a few buildings. We had close to 200 buildings, and we were beginning to sell a few just to get the cash in. And of course, the market wasn't that good, so we were quite reluctant to do that. And that was really great news from Mizuho. It was a tiny little loan, a small loan. But once we got that first loan, we went around to all the 70-odd banks and say, look, big brother Mizuho Bank is lending to us.
All you
So
needed that one, huh?
all we needed was that, and then the banking relationships rapidly built up to many banks, the regional ones especially. They were very keen to lend to us. We weren't asking for high LTVs. We were looking at, our gearing was actually all along quite low as a REIT. We wanted the stability. It was just a refinancing problem which caused us all the worries. So we established all the Japanese banking relationships, which we still keep today. And so that actually completed our sort of venture into Japanese property. We had the deal flow throughout the 10 years or so, from early 2000s to 2011. We had built up a good network of deal flow in the regional cities, the regional agents and brokers. We had built up a good network of very reputable and credible property managers responsible for the daily leasing and renovation and repairs. And we have very good relationships with them. And finally, we had built up good relations with the Japanese bank. So what more do you want as an
Yeah.
investor in investment properties in Japan? And we were sort of accepted as the credible, friendly foreigner who never defaulted on anything. So that was our image in the banking field.
Well, in a blink of an eye, you've done this for over 20 years.
We have now done it for coming up to 25 years.
Yeah, so
Mm.
that's it's just the time flies. But I think what really interests me when I know about Altus and your business is that you're after 25 years, you're still very much hands-on in terms of selecting the properties, right? So tell me some of the stories. How was it for you first time, your first investment in a residential real estate in Japan? How was that experience like?
Well, in short, it wasn't a success. Okay.
Okay.
We actually bought, the first one was a tiny little one, and that was okay. But I think the second or the third one, it wasn't a success. It was actually a disaster.
Oh
Um,
wow, okay.
no exaggeration. We bought the wrong building and we could let it out. There was no tenant. All the tenants left. It was a sort of big site, a little bit out of the way. So we were worried. And some of the Japanese property managers sort of took pity on us because we were nice guys. We were the friendly foreigners. So they took pity on us and they said, maybe we introduce you to some age home operators. So that
Okay.
property rapidly became an age home. And we actually let it out to an operator, which took in that building, it was about 70 tenants or old people, and they paid their rent subsidized by the government.
Okay. So is it like H home? Is that government housing? Is that
It
how it's
wasn't government
classified?
housing. It's the age home industry in Japan is actually very well developed. It's very strictly regulated, so all the operators have got to have license.
Yeah.
They get inspected regularly, and the government would subsidize the rental paid by the occupiers.
Yeah.
Okay, so I mean that particular age home was not a luxurious type of age home. It was a very basic kind for the mass market. So from that experience, um, we actually built up a network of age home operators.
Oh
So
wow.
it actually
Okay.
turned out to be a quite a uh, rewarding experience. It got us
Yeah.
worried at first, but it turned out to be quite rewarding. And even today, we do have a few age homes, and actually more than that. Today, we also have some so-called group homes.
Right.
These group homes, in nature, they are similar. They are subsidized, but they cater to other types of people, maybe slightly handicapped, people who need to be sort of um, reintegrated into normal daily life.
Yeah.
So there are the group homes would be a kind of um, stepping board for them to stay in for a while we help them get jobs, part-time jobs initially, and when they are fit enough or ready to get full-time job, they leave the group homes, and then
Right.
our operators will get new tenants. So it's this kind of housing which we also provide.
Right. Is
Um,
that building still there, or is that building have they switched it?
oh, the first building is still there. I actually visited it last year. Um, um, it's still there. It's still,
Yeah.
yeah.
It must bring some like some memories. Oh, this is where I stand there, and this is how I evaluate it.
It's not only where I stood, it is where I stayed every single time I was
Oh,
staying
you
at.
stayed even there
I
at that
stayed
building.
there. I stayed there. It is a very old building in Sapporo. I stayed at room right at the end of the corridor, and it's really quiet. It's really nice, especially when it snows.
Yeah.
Um, it's beautiful.
Yeah, but do you still practice that when you're selecting buildings now? You got to stay there for a bit before you decide that this is a good building for you to go in on?
No, we don't stay there, but we actually look around. We would always have to, as you just said, it's very hands-on approach because at the end of the day, um, uh, picking a property is location, location, and location, and you just have to make sure that it is the right property in the right area for the right tenant type.
Yeah.
Okay.
Yeah, and look, and I think it worked out for you extremely well, especially over the past year, I would say.
Mm.
The Japanese market is certainly making a big comeback.
Mm.
In fact, there are a number of reports that that indicates that in 2025, the residential property is on an upward trajectory. I've heard that in Tokyo, the prices in the upscale neighborhood like Minato and Shibuya have risen about 5% in 2024, percent.
Yeah, definitely. I think land
But that's
prices
not
are
where you're focused on, though, right? Is that where you're focused?
well, we are focused on mass market residential build types of buildings. We buy the entire building with the underlying freehold land, and we let out the entire building to mass market residential tenants. So
Yeah,
what kind of tenants are these so-called mass market? Usually they are the salaryman, what they call white collar worker in Japan is they call them the salaryman. Um, young people, maybe young couples. Um, there are some buildings we in our portfolio which cater to families. For that type of buildings, the tenant turnover is much lower. But as I said,
mm,
most of these buildings are for the mass market, white collar type of worker in city center, in good
right,
locations, which are convenient for their work. Um, yeah, that's what we specialize in. It is actually a very liquid market, um, and it is not a market that many large foreign funds focus on. And I can tell you
right.
why. Notwithstanding that the market is very liquid and very big, foreign funds, large ones, because their minimum investment size per investment, we are talking about tens of millions US.
Yeah,
But these investments in residential buildings, we are talking about maybe 3 million US to 10 million US per ticket. So it actually takes a long time and a lot of effort to um, look at them, pick the right ones. And every time it's not just inspection of the location, but it also understanding of the city, talking to the local managers, um, uh, whom we have to make sure are reliable,
yeah,
to make sure that these are the right type of building with the right type of rooms for tenants of that area. Um, we just don't want to make the same mistake as the H home. Okay. Yeah, so
right,
that is
right.
why it's still quite hands-on.
Yeah, go ahead, go ahead.
Okay. And actually the big investors would
Yeah.
focus on
Well, I
probably the
think
commercial office. Oh, the line is breaking.
that's what I was going to ask. I mean, you guys, no, no, yeah, I think there's a little bit here, but no, I think everybody can still hear us. That's what I was going to ask because you guys made the conscious decision of going full in on residential.
Mhm.
Why residential? I mean, why didn't you guys consider commercial?
Okay. Residential is much more steady, predictable, and stable. Um, as I explained earlier, we are in there initially for the recurring income. And we find that the recurring income is really very predictable. The sort of um, bad debts rate is very, very low. And
Right.
But in the commercial market, it's a very different market. Commercial market, you have to find office tenants and so on. And you really need to be a local player. By local, I mean local in that city, not just being Japanese. If you are from somebody from Osaka trying to buy a building in Tokyo or in, for example, in Sapporo, a commercial building, you are not a local. You have to be a local. You have to have the local
Oh,
connections to get the office tenants. Okay, so
right,
if you are a foreigner, um, it becomes a little bit risky.
right, right. So there seems to be a bit more cultural barrier then, in
It's a
that
cultural
sense.
barrier, yes, yes. Um, and a lot of people know Tokyo very well. So if you go to Tokyo and look for the top end, highest grade office buildings,
Yeah,
all of them are owned by large Japanese corporations.
right.
They'd never come onto the market.
Well, why do you think that is though? Why do you think there's such cultural barrier for commercial building versus the residential? Are they afraid that they just want to make sure that the Japanese companies get their share, get their space, or why do you
Well,
think that
especially
is?
the,
There's this
yeah,
distinction there.
I mean, the top grade commercial buildings really are just the playground for the large Japanese corporations, as you can imagine. It's simply that the mass market residential, where ticket sizes are smaller, there is a space for non-Japanese
Mm,
because they can't really tell where you're from.
yeah,
And in fact, we do make a conscious decision to work with local partners and local agents and property managers to ensure that we don't publish ourselves or advertise ourselves as a foreign buyer.
yeah,
Because we have come across cases where um, uh, as you said, it's cultural. Because if you're a foreigner, they would sort of have a question mark. Would you be able to complete the deal? Would you at the last minute try to negotiate and for a lower price or better terms? Because they do have their own negotiation etiquette. There are certain aspects which can be negotiated. There are certain aspects which is not normally negotiated at certain stages of the discussions. So it's a very Japanese type of culture.
yeah. Is there a lot of wine and dining with the Japanese culture? Because that's the perception, right? I mean, in order to do business with Japanese, you got to go out and go to the Shibuya and have have a few sake over sushi. Is that how it's done, or is that not really?
Not really. I've never done that. I've never
Yeah.
done that. I've never done that.
It's
Yeah.
all a myth. It's all a Western. It's all one of those media stereotypes that
Well,
people create.
I think in the um commercial world, there's a lot of whining and dining, and certainly um up until 5 years ago, pre-COVID, is actually normally expected that an employee, a staff, the salary man would always go out after work and drink with their bosses and so
Yeah.
on. But increasingly, that is frowned upon these days. I was talking to,
Oh, really? Okay.
yeah, yeah. It's sort of they just feel that is coercion by the employer, by the boss, and the younger generation
Mm,
don't they aren't really keen on that. I was talking to a
yeah.
banker. Um, we were whining and dining this banker simply because he is leaving the branch with which we bank. Okay, so we
Right.
were just thanking him. He's a young gentleman. He's moving to another branch in Fukuoka, and I was asking him exactly the same questions: the drinking culture, the
Yeah.
whining and dining culture, and that's what he told me. So
Well, I mean, that's good. I mean, we're dispelling some myths here, so anybody who's interested in doing, business in Japanese would know, okay, well, that's not really how it goes. We could just go straight into business and all that. But okay, so when we talk about residential real estate,
mm,
we cannot discount the fact that, Japan, I think pretty much the developed world are encountering this demographic problem, right? I think Japan is the first country that has ever sound the alarm. Now China is having this issue, Korea is having this issue extremely. So Japan's demographic, it's, I think the population is rapidly aging. 28% of their citizens are over 65. It's going to climb further in 2030. Um, how do you see that? How, from your perspective, what are you seeing? Is that something to be concerned about, or are you seeing a shift in terms of, no, they're now, they're implementing policies to make things demographically better?
Yeah, declining population definitely has always been a feature of Japan, and now, as you said, pointed out quite rightly, it's also happening in Korea and China and many other uh, developed countries. But it's not a worry that after some years or some decades, the population of Japan will shrink until the last Japanese will switch off the light and no more Japanese. Never. That's not the worry. Um, in fact, it is not a worry, but the declining population is bringing about some very significant changes. Firstly, is urbanization, and I'll go more into that. Secondly, is a lot of immigration. Okay. First, urbanization. What we are seeing, actually, right from the beginning, when in year 2000, when we went there, already our property agents and managers, they were talking about, look at the key regional hubs, because people are coming into the key regional hubs like Sapporo, Sendai, Fukuoka. They are coming in from the countryside. Why? Because the people living in the countryside are getting older, and the kids don't want to stay in the countryside. All the kids would be working in the cities.
Right.
Okay. So as they get older, they would also want to move into the cities to be close to their kids and grandchildren. And typically, many of them would actually move into an age home located in the city. Okay, so that's one aspect of urbanization. The other is what we are seeing is what's left behind in the countryside. And a lot of people are talking about, oh, there are some big houses in Japan which nobody wants to buy. And in fact, the local government even wants to pay you to take over a certain property. Yes, but that only happens in the so-called countryside ghost towns. Okay, a lot of these places are really being deserted as people
Yeah.
move into the cities. But we are seeing a lot of the city population growing. So that's urbanization. Second is immigration.
Immigration.
Okay, immigration has always been a sensitive topic because the government has never advertised that. But right from the day one when I invested in Japan, we were already seeing Korean students, Chinese students who would study there and eventually would settle down there. And throughout the years, there was an increasing number of these students coming in. And about 10, 12 years ago, especially in the southern part of Japan, we are seeing a lot of workers from Southeast Asia, South Asia and Southeast Asia. So
Oh, okay.
for example, I think it must have been during the financial crisis. So it must be 12 to 13 years ago. I went into a convenience store in Fukuoka, the usual convenience store next to the business hotel we normally stay at. And then I suddenly discovered all the 2 or 3 workers behind the counter. They were all from maybe Pakistan and Nepal or India. And they were speaking Japanese, right? So they were quite young and they were replacing the older people I previously met behind the counter who were all the Japanese workers. But as they were getting old, the whole economy needed new blood. So they were inviting the students, they were inviting people from other countries. They are quite strict about those who can come in, because they need them to be proficient in Japanese.
Right.
So we have been seeing that for the last, it is very visible for the last 15 to 20 years.
Yeah.
And last week, I was in Fukuoka. First time ever, I got into a taxi where the taxi driver wasn't a Japanese. First time ever. Okay. So we are seeing a lot of that.
Okay. Well, and I think that's good, but I want to get back to the urbanization point because it sort of impacts because urbanization, the urban rural divide, right? Obviously, we've heard that it creates some sort of a bifurcated market where the prime urban areas like Tokyo, their price growth, exponentially,
Mm,
while while the peripheral region experience stagnation and depreciation. I
mhm.
mean, are you seeing that in Tokyo as well? And are you seeing that in Japan, or you're not seeing that at all?
Oh,
That doesn't happen.
we are definitely seeing rental increases in the last couple of years only. We are definitely seeing cap rate compression um,
Mm,
ever since the early 2010s.
right.
We are seeing increases in land prices. Fukuoka, for example, I saw a report published based on government data that compared with around 10 years ago, land prices in the city of Fukuoka has doubled.
Yeah.
Okay, so we are seeing all that. And more recently, in the last couple of years, we are seeing inflation. Initially, it was sort of very much disguised type of inflation. So for example, you go to a coffee shop, you order a toast. Previously, if you order a toast, they give you the butter and the jam. A year or so ago, just over a year ago, you order a toast, you have to pay additional amount for the butter and the jam.
Oh, wow.
Okay.
Okay.
We check into a business hotel, you pay for the room. Previously, they clean the room every day, but now you have to pay extra for the room to be cleaned.
Mm,
So that is that's inflation. But these days, inflation becomes more obvious because we are seeing actually new menus with new prices. Okay? We are seeing new vending machines. Well, not the same vending machines, but with all the prices changed.
mm. And how does that impact your real estate decisions, though? I mean, from investment decision, has that impact your residential returns or anything of that sort right now?
Well, I think it has impacted the way we see the market. Previously, when we got in, we were there for the recurring yield, and the very low interest rate with high yield, there's a positive carry. We didn't really care much about capital gain. Okay.
Mm,
But I think now the investment strategy is to look for capital gain.
okay.
Okay. Capital gain through two things, cap rate compression, as well as rental reversion. Now, that has to some extent affected the sort of properties we prefer. Previously, when there was no way you could increase rent, we look for properties with the larger units for the family size units because family tenants are usually more stable, turnover is much lower. We want stability.
Mm,
But today, we are looking for the younger tenants with the slightly smaller units,
mm,
maybe the young salaryman, the single, or the young couples with no kids. There is a higher natural turnover of this type of tenants. Because
right.
if they work for a corporate in Japan, maybe the employer would ask them to move from Fukuoka to Sapporo after a few years. So there's a natural turnover. Once the tenants leave, today, we would look for opportunities to raise rent.
Yeah.
So uh, that's how it has impacted our preference. We are preferring buildings, again, well-located buildings that cater to the younger tenants. with a higher natural turnover.
Yeah, and I think that's very. I think you're hedging. You have hedged that effectively pretty well because right now, what I've been hearing is manufacturing is pretty much coming back
Yeah.
Japan. A lot of the companies that are outside are looking to come to Japan. I think the one of the bigger ones was TSMC.
Yeah.
Was doing some big manufacturing location in Japan. So I think that could drive a lot of drive a
Yes.
lot of
Yeah, quite right. TSMC is a
migration
big,
to look for job opportunities, urbanization opportunity.
yeah, yeah, quite right. TSMC has a big ripple effect on many things in Kyushu, not just in Kumamoto, where the TSMC site is, but in Kumamoto and Fukuoka, and in fact, the entire Kyushu um, has been impacted. Kumamoto is an interesting city. In fact, we invested there around 15, 16 years ago. That is well before TSMC. It is
Yeah.
a very wealthy city. It is a very old city. Kumamoto Castle is one of the oldest castles in Japan. So it's very well established, very wealthy. It is not international, not like Fukuoka, where they have got international flights. But it is close enough to Fukuoka that many people from Kumamoto, um, uh, they are reasonably well exposed to the international community and what's happening outside of Japan. So we invested in Kumamoto, in the city center, as normal, in line with our strategy at the time for the recurring income. And then around the early 2010, our property manager started to say, "Hi, Arnold, you must look at this area in Kumamoto. It is a big industrial area."
So that was before TSMC was there.
That was well before TSMC. Okay. Because, and I said, why? Oh, they are saying, oh, because many of our technology companies, like the likes of Sony, Tokyo Electron, are setting up there. I didn't really pay much attention because, the Japanese, um, they don't really want to force a point. And that's something I've learned. I didn't really quite catch that at the time, in the early 2010s. I was still sort of relatively inexperienced. And they were sort of asking me to look at that area. I didn't until during COVID. I heard, TSMC is setting up there in a really big way. In fact, the TSMC setup in Kumamoto is similar in scale to the one in Arizona, which is very much in the news. But the one in Kumamoto, not many people know about. It's,
Mm.
they have kept it very low profile, typical Japanese style. And but it is large in scale. The phase one was completed ahead of schedule. It started test production last March. It started full production last October, and that was slightly ahead of schedule.
Yeah.
And importantly, it is majority owned by TSMC. The other
Okay.
partners are the likes of Sony and Tokyo Electron and Denso. Okay, so all the high-tech companies in the same chain of supply. And it's a very successful one. They are now onto phase two, and they have just announced phase three. And phase one is not the very, very thin chip, but phase two and phase three would be increasingly high-tech and thin. And yes, and so that actually has encouraged a lot of focus and attention on Kumamoto itself, because the TSMC area is part of a huge industrial estate, uh, which already was there back in the early 2010s when I first heard from our property managers. It's huge. They have got a lot of logistical structures. They have got research laboratories. They have got a lot of water supply.
Mm.
They have got the army base there. in
Oh, the U.S.
Kumamoto.
Army base or the Japanese Army base?
Japanese self-defense force.
Okay.
Is a major base in Kumamoto. So they have got all that, and it is a very well-developed industrial area. And TSMC is only icing on the cake.
Mm.
It's already huge. So I have been visiting that site a number of times. The last time was 2 weeks ago, and I just saw a huge cranes over another site, and that is not TSMC. That one is Sony. So everybody is increasing capacity there.
So there's a big growth coming from that standpoint.
Yeah. The Kumamoto International Airport was a tiny little international airport. They have expanded it at least twice in size. It is still small, but they have really expanded it.
Yeah.
And there are more flights. There are even flights to and from Hong Kong, directly from Kumamoto.
Mm.
Kumamoto is only 30 to 40 minutes on the bullet train from Fukuoka.
Okay. So it's not too far away.
Not too far away at all.
So
So
how is your
yeah.
coverage in Japan? How's your coverage in Japan in terms of cities? Are there still, I mean, are you pretty much, do you have properties pretty much like 90% of Japan by now, or it's still very much concentrated in a few areas like Fukuoka and what you said?
Well, we started off in Sapporo, and currently we are no longer running the REIT because we sold the entire portfolio when the market was up
Yeah.
in 2016. We sold the entire portfolio of the REIT, and we have since then been running our own portfolio. Our own portfolio is spread over from the north, Sapporo, Hakodate, all the way down to Tokyo, all the way down to Fukuoka, Kumamoto, and to the southern tip, which is Kagoshima.
Mm.
When we were running the REIT, we also had properties in the northeast, along the northeast coast, which is Koriyama, Sendai,
Yeah.
where we had the big earthquake. We also had a good sized portfolio in Hiroshima, which is another big industrial city. Yeah.
Right. Speaking of earthquake, I mean, recent weeks, even the news was predicting there's going to be a big one coming in 2025. Now, I honestly don't want to speak too much of earthquake because I don't see that as much of a risk specifically for Japanese because they've experienced it so much. Some of the buildings are amazingly earthquake proof. So by now, I think they know how to handle it. But from your standpoint, I mean, what are some of the insurances that you guys are making sure that, what are some of the infrastructure that you have in place to insure yourself on these natural disaster things that might happen in Japan?
Well, the best insurance is really to make sure that you are buying the newer buildings in the cities. In all the earthquakes we have come across in Japan in the last 25 years, the cities are very safe. All
Mm.
the damages, even deaths, are in the countryside because of landslides, not directly because of earthquakes.
Yeah.
They are usually caused by the landslides. In the case of Sendai, it was caused by the tsunami. It wasn't caused by the earthquake. If you remember the Sendai one, 11th of March, 2013 or 2012. I went to visit Sendai. We were managing over 20 properties, over
Yeah.
20 buildings there. I went to visit Sendai on the 1st of May, so about 6 weeks after the earthquake. And they were all in good condition. Then some fallen tiles, some broken windows, but otherwise very good conditions. So as I said, all the damages and the injuries and deaths are really in the countryside. The
Right.
Kumamoto earthquake in 2016, that was a very nasty one because it was a lateral movement. It wasn't a vertical movement, and that lasted for days and days and days. But none of our buildings were damaged. They were all in very good condition. Again, some fallen tiles. And of course, we buy insurance, and the insurance companies actually, within weeks after the earthquake, gave us something like 20 million yen without very detailed assessment. They just gave earthquake insurance. They pay them out to everybody without delay. And we kept holding
Right.
on to that 20 million yen until last year when we needed it to do the outer wall.
Oh,
Yeah,
okay. Oh, wow. Wow. Well, I mean, you know, the one thing that I would say about insurance companies, as long as you're not an American insurance company, you're going to be pretty much protected.
yeah. Well, I think in Japan, especially with the earthquake scare, and everybody, I mean, if you ask the Japanese, they say, look, we have been hearing about that threat ever since ever since childhood. And of course, there would be from time to time big earthquakes. Sendai, um,
Right.
Kumamoto, Tokyo. From time to time, there will be earthquakes, but the building quality is very good.
Yeah.
So it's always quite safe in the city.
So how competitive is what you guys are doing? I mean, I don't imagine there's a lot of. I know that there are some large fund managers that does have, Japanese REITs and Japanese real estate investment, maybe part of a larger global real estate funds.
Yeah.
How competitive is your specific space that really focuses in Japanese real estate? And how is the way that you structure your fund a little bit different than what others are doing?
Okay. I would say, especially in the regional hubs, our main competitors are not so much the large funds. They are the local high net worth, the local corporates.
Mm,
And that's why this market is very liquid. This market comprises buyers and sellers, mainly made up of Japanese. Um, Whereas in the commercial office market, probably in the last couple of years, you get 25% of the transactions with foreigners, whereas the percentage for mass market residential in the regional hubs is lower than that.
right.
So I say main competition comes from the locals. And locals in Fukuoka is not a local in Tokyo. It's not a local in Sapporo. But in a way, we actually benefit from the fact that we are not local anywhere. We are a foreigner, albeit the experienced and friendly foreigner who has been there with a good network. So we actually compete in Fukuoka with the Fukuoka locals. We compete in Sapporo with the Sapporo locals. Give you one example. We once bought a building which was used as an H home in Sapporo from an operator and owner who wasn't a local in Sapporo. He was a local in Kyoto, but in
Mm,
Sapporo, he was a foreigner. And he was more of a foreigner than I was because he didn't have the local network and we had the local network. So we were helped by our local network and
right.
we were able to buy the building from him. When he was running his H home, of the 60 odd rooms, only 2 or 3 were occupied.
Yeah.
But when we asked our local network of operators to operate, it took only 3 months to get it up to full occupancy.
Right.
So that's the competition um, with the locals, and our advantage is we are the sort of experienced foreigner who has built up different local networks.
Yeah.
The larger funds, we don't actually compete with them. In fact, taking the example of the REIT, why did we sell the entire portfolio? It was worth a few hundred million US at the time, 2016. Why did we sell it? Why did we generate so much interest from the large funds? Because the large funds viewed us as the aggregator.
Ah,
They
okay.
couldn't be bothered to pick up those relatively small buildings by their standard. But
Yeah.
once you have aggregated a portfolio, they were willing to pay a premium, a bulk premium.
Okay. All right. And how streamlined is your operation, right? Because obviously, occupancy is something that you guys really have to make sure that you stay at that level. So from sourcing the building to making sure it runs operate right to time you make sure somebody's renting it. I mean, how streamlined is that operation from your for how
Okay.
streamlined is your operation to make sure that that keeps the money coming in?
Okay. The leasing, the signing of leasing contracts, the advertising for new tenants, the repairs, the renovation necessary whenever a tenant turns over. These are all what we call the property manager's job. Okay. And the property management industry in Japan is very well developed. There are
Mm,
big property managers and small ones as well. But we have the network of the good and reputable ones in each of the local cities. Okay. Um, and they take care of all that. So that entire process of managing the common areas, leasing, collecting rent, signing new contracts, repairing and renovating is very standard, very streamlined, but there is a conflict there
mm,
with the owner. The property manager, they get fees from leasing the units out. So they get a commission. But they don't really care. I mean, uh, that's a cruel word to say, but their interest is not really aligned with our interest, which is to get the best market rent. Their interest is just to rent it out. So
right.
they are not sort of driven to get the best market rent. Their interest is to renovate it. They are not driven to get the best cost quotation.
Mm,
Their interest is just to get the tiles replaced. They are not really focusing on, we have to use the latest color in fashion. We have to use the latest design. In fact, if anything, they'll just use the old design because
right.
they don't want to change anything.
Yeah.
So that conflict comes in, and the way we resolve them is we have our own colleagues in Japan looking at the entire leasing, renovation, common area maintenance process from our point of view. Is it the best material use? Is it the best quote? Do we really need to repair this room? Because, for example, a room may cost 1 million yen to repair because the previous tenant had done a lot of damage. He's been there for a long time, so it needs a major uplift. But there are 10 other rooms which only need 100,000 each to repair.
Right.
So how do we most effectively use our money? Of course, we use our money to renovate the 10 rooms first and get the tenants in. So our colleagues there would look at things from our perspective to make sure that process, even though it's very streamlined, is done with our interest in mind, with our after careful cost benefit analysis for each action
Yeah.
taken by the property manager. So the property manager would ask them for their views and they would give their views. They may even say, look, don't renovate this room, it costs too much. Renovate these 5 rooms first and get the tenants in before you spend the larger amount to renovate this room.
Yeah.
Okay. So this is how we manage it. And we have built up this sort of system um, over the past 25 years. We actually still maintain a big database of all these renovations accumulated over 200 buildings in the last 25 years.
Yeah, and I think from, as I have my own apartment that I rent out, and I can honestly say, I mean, just in Hong Kong, all the stuff that I have to do to make sure that my apartment gets rented out, I get the tenant and all that, that's a lot of work. And
A
and
lot of
and
work.
yeah, it's a lot of work, and it just really wouldn't hassle. And from my perspective, if I were to invest, in real estate again, I would definitely find someone who's done it, who's gone through the pain of selecting the right location, the right opportunities, and have a system that would help ensure the property is properly managed over time, the right tenant comes in, making sure the rents are paid on time and all that, making sure all the legal regulation requirements are met. Having that system, it's definitely worth paying a bit of a premium or a management fee over, right? So
Mm.
from my so and Japan and your niche of the segment, like you said, not a lot of large manager play into that. So you guys have a unique position, in that standpoint. What are some of the terms if an investor says, okay, this sounds interesting? I mean, what are some of the terms that you guys are offering?
Oh, we do have a fund, um, which focus on this type of assets in the regional hubs. And we would manage charging a management fee of 1.5% with a carried interest of a performance fee of 15% after a hurdle rate of 6%.
Right, right. And it's registered in Hong Kong?
It is registered in Hong Kong. Is what do they call it in Hong Kong? It's a SFC registered fund. Uh,
It's an OFC. It's an
it's an OFC. It's an OFC. Yes.
right. And what's the minimum ticket size for you guys?
500,000 worth. Although we only take subscriptions in yen because we don't want as manager to be also playing the currency market because
All right.
as you know, the yen is very volatile.
Well, I mean, has it gone up a little bit now? Because everybody was going to Japan for personal vacations because the yen was so low. I
Yeah,
haven't been paying attention, but I need because I'm heading back in during the summer. But maybe I should buy it now.
you should. I think it's gone up a little bit from very low levels, but it is still extremely cheap.
Yeah,
I've never seen the yen so cheap. I think the only time when it was really cheap was in the late 90s or early 2000s. Um, and that was 130 something to a US dollar, and it only lasted for a short time.
right.
But now we are talking about 140, 150, 149 today, I think.
Okay.
Mm.
You think it's gonna go up though? Should I buy now? Should I buy a little bit just so that I can go during the summertime?
Oh, yes,
Not financial
definitely.
advice,
I
just
mean,
just just me asking.
yeah, I mean, personally, if I have yen now from our rental, I try not to convert it into any other currency. I just keep it in yen because
Yeah.
I think the yen will sooner or later rise. Um, it's an interesting case because you were asking about demographics, uh, and it's interesting to note how demographics is related to economy, like immigration, and not only that. Um, from the day I visited Japan, the first few years, I observed, and I'm actually quite proud to say that this observation has come true. Um, Japanese politics is dominated by the LDP, and the votes of the voting base of the LDP 20 odd years ago or 30 years ago, a lot of them are from the countryside.
Mm,
Okay. Countryside, what kind of people? Older generation. Older generation, what do they prefer? They want price stability. So any policy which encourages inflation is really not favorable politically.
mm,
And then Koizumi came along, if you remember,
right.
a sort of very young LDP leader. He became prime minister. And that's when we saw the beginning of scale urbanization in Japan. Cities were growing, the countryside was sort of dying away. And then you gradually notice that the government was promoting policies which were more for younger people. Young people in an inflationary world and with sort of healthy inflation is a younger generation that benefits.
Yeah.
That's always the
Yeah.
case historically.
Yeah. Well, I
So
think that's all point to a good sign, though. I mean, that's there's a way for them to solve the democratic problem by either by immigration or encouraging the. At the end of the day, I mean, young people just want an opportunity to head up, and the whole reason why China is not able to do this at this point in time is because people said that they can't afford housing, and they're not having babies because they can't afford it, right?
yeah,
So if Japan is able to solve that problem, they might be the first one to actually come out of that demographics rut.
exactly. I was talking to people who work for a large Japanese corporation, and they all were very happy when they were visiting Hong Kong, and they say, "Oh, they just raised our salary by an average of 5%." That
Ooh,
was unheard
5%.
of. That was unheard
That's
of.
a lot.
That yeah, the last couple of years, every year they have had raises, but 2000s, 2010s, that kind of raise is unheard of.
Hmm. So positive things to come seems like positive things to come. So
Yeah,
well, look, Arnold, it's been a wonderful conversation. I've learned a lot. Thank you very much for your time. So,
thank you, Simon.
if there is an investor looking to ask a question, how do they find you guys? Who should they ask for?
You can give them our contact. My contact, my colleagues, Charlotte and Sissy.
Well, you could.
Hello, you're breaking up.
Okay. Well, I'll post up the email. Sorry, no, I'll post up the email address of these guys
Yes,
so that you
yes,
guys can reach out. And
yes.
yeah, it's look, Arnold, it's been a great conversation. I learned a lot about Japanese, how you guys do business, and some of your experience.
Hmm.
And hopefully we'll have this conversation again in like 6 months, a year down the road, and see you guys are growing more and more in terms of AUM and better things to come. So thank you
Thank
very
you.
much. I appreciate your
Thank you,
time, Arnold.
Simon. Thank you. Thanks for
Okay.
your time too. Bye-bye.
Bye, everybody.
Bye-bye.
Bye.